Good. Well, today is Friday, March 28, 2025. Your day for Monday, the 31st. All right, let's go. Well, as far as new setups, no new setups going into Monday. There are a few in here that look like they're still in trouble. Market super oversold. VIX is just kind of right at the cusp of being stretched, right at that 10% plus level. So we could get a pretty serious bounce from oversold fairly soon in here. So I think now's not the time to establish new shorts, unless, of course, you felt like you had the mother of all shorts. TPR triggering, so go ahead and bump your stop a little on that one and bump the stop a little on JBL. As far as stocks looking like it could be in trouble, quite a few days in the pullback, so to speak, on this one, but it looks like it's in trouble still. This one caught my eye too as a stock that's in the early phases of being in a lot of trouble. Looks like the 200-day simple will be the first goal on that one. For now, though, again, let's just hold off and let things shake out. Let's take a look at the portfolio. We finally have enough to create a separate watch list. CCL selling off fairly hard. RCL still set up as a setup. These leisure stocks, as you'll see in 1 second, still not doing fantastic. But that looks pretty good. Beginning to continue to sell off, I should say. No changes in stop until unless, of course, it hits the IPT. By the way, one reason to short, obviously, is to make money on the downside. And shorting could be tough because retrace rallies can be really vicious. When the market's going in one direction, it's fine, but you will hit some retrace rallies along the way. The good thing it does is it helps you see both sides of the market as I preach and keeps you from becoming too bullish when all of a sudden you start seeing some signals and you start seeing setups to the downside and reminds you to honor your stops, etc. So as I was saying earlier, it's nice to kind of keep your head while everybody else is losing theirs. Not that you want to be schadenfreude or anything, but it is kind of a nice feeling when you're trading the market as you see it as opposed to as you wish it was. Anyway, enough of that rant. JBL selling off nicely in here, down 341, 2.5% or so, or almost 2.5%. So we'll bump the stop a little lower on that. It looks like it has potential at the least to come down here and challenge that 200-day moving average. TPR triggering and selling off fairly hard. This stock looks like it's in the early phases of being in a lot of trouble. Might be wishful thinking, but it too looks like it has the potential to go down to that 200-day moving average. Let's take a look at the overall market, and really a lot of what I'm going to be saying as we go through these sectors is going to be repetitive, but I just want to show you what the carnage looks like. So the piece, as you know, they retraced back up to that 200 and then got thwarted there, selling off fairly hard. Looks like at the least they want to challenge their recent lows in here. Don't be a hero just because the VIX is stretched. But if we get stretched further on Monday, we will keep an eye out maybe for an intraday reversal. NASDAQ Composite made it all the way back to its old lows. The Qs, by the way, as I've said quite a bit, 2 weeks ago triggered a sell signal and a TFM 10% system. And believe it or not, the Ps still have a ways to go to get to that 10% level, which is also below the 50 simple moving average. So I'm keeping an eye on it. I'll let you know when it gets fairly close. But for now, the longer term model bases that at least is still long on the S&P 500. Let's take a look at some of these areas in here. Throw a dart. Most looking pretty ugly. This is AI and robots. You can see breaking down with vigor. Robots also breaking down with vigor, as you can see. Cybersecurity continue to break down out of this pullback. The list goes on and on. Internet taking out the 200-day moving average. Once again, gold and copper, about the only areas that are kind of hanging in there. I'm just not seeing a whole lot of gold stocks to go after at this juncture. Brand new highs in gold, so that's pretty good. Gold stocks, you can see, tailed off their best levels. They're a little wide and loose. I am keeping an eye out for setups there, obviously. Back to the downside, broker-dealer selling off fairly hard. The list goes on and on. Biotech getting whacked today, banging out some new lows with a bit of vigor. Software approaching its prior lows. And here, medical devices recently took off. Nope, came all the way back in. And now resuming a slide out of a pullback. Transports, especially jets, looking ugly, as you can see. So again, the list goes on and on. Leisure, as I said a second ago, selling off out of a pullback. Cloud computing selling off fairly hard out of a pullback down to the prior lows. Semiconductors remain a bit of a bummer, down 2.5%. They made it all the way back to their prior lows, and that's just not pretty. Bigger picture and longer term. Retail, last one. I swear, has pulled back recently, but then now it's beginning to roll over too. So obviously the market remains in a short to intermediate term, I should say, downtrend. Longer term model, of course, still long on the P's and has exited or short, however you want to look at it, on the Q's. But you know the routine, take things one day at a time. Very dangerous environment to step in with new positions when you're so oversold like this, especially when it happens that quickly. So let's just sit tight. Let's see what happens on Monday, and then we'll take it from there. Everybody have a great weekend. I will be checking in. Hope I don't check out. I will be checking out of a hotel tomorrow. I will be checking in at some point during the weekend. Maybe not till Sunday. If you need to find me, I have a wedding to attend. I think that's pretty much it. Everybody have a fantastic weekend, and we'll talk again on Monday, if not sooner. Thank you so much.